Hello, everyone. My name is Chad Hart. I'm an extension economist at Iowa State University. And what I'd like to do in this brief video is walk you through the update that USDA provided us in July as we're looking at not only the supply of crops that we've got growing out in the field, but how we expect to utilize those crops over the next 18 months. Those were the updates that USDA provided to us in the WASDE report that came out on July 11th. And so let me show you what those numbers tell us about the marketplace right now. So as we're looking at the U.S. corn market, the idea is that when you look back over the past 4 years, and as we look at the projections for this year, what we are seeing are some of the largest crops we've ever had. In fact, the outlook for 2025 is we could have the largest corn crop we've ever produced at nearly 15.7 billion bushels. But as we look at demand right now, the usage of U.S. corn, this is where I'm going to take us back to the 2024 column there. What we are seeing is incredibly good usage, in fact, record usage of U.S. corn right now. Now, as we're looking at the balance down there in 2024, we're talking about using 15.315 billion bushels of corn. Here's where USDA has been updating those numbers, though. With this month, they actually ended up raising the export number down there by 100 million bushels to 2.75 billion bushels. Now, that basically ties the record we set in 2020 as far as bushels being exported for U.S. corn. On the other hand, they ended up lowering the feed demand usage number there by about the 75 million bushels. So overall, we still see that usage growing, but not quite as robust as I think some had hoped as we looked out there. But with that larger usage, we are seeing ending stocks for the 2024-25 marketing year have headed down to 3.14 billion bushels. Yet, despite that good news, USDA actually lowered their season average price estimate for 2024-25 by a nickel. So we're down to $4.30 a bushel. So as you think about that, we are lowering those ending stocks, but we're looking at the biggest crop we've ever had growing out in the fields right now. So we're looking hopefully to see some gains as we look at usage for the 2025 corn crop. The problem was that the only number USDA adjusted as we looked in that gray box for 2025 was the feed demand number, and they ended up lowering that by 50 million bushels. So while we still are projecting record usage of corn, it's still well short of what we're going to be able to produce. And so USDA is projecting that stocks will rise as we look out 18 months from now. But that rise in stocks means a lowering of prices as well. And so the 2025-26 season average price is estimated at $4.20 a bushel, which is where USDA has had it over the past couple of months. When you're looking at the soybean market, we saw some similar adjustments here. In this case, as we look at 2024 demand, and I'll start off there. Basically, what they said was, okay, we didn't plant as much in 2025 as we expected, so they lowered that seed and residual usage down by 15 million bushels there. And that was realistically the only change they made for 2024. So that ended up adding a little bit to ending stocks. Yet, despite adding stocks in this case, USDA was raised their season average price estimate up by a nickel, moving from $9.55 to $10 a bushel. But that's still well below where we've been over the past few years. Now, looking forward into 2025, what we're seeing is, again, the crop is looking fairly well. USDA stuck with their trend line yields. And so when we look at demand, well, we're hoping that demand is building. And it was, again, a mixed picture as USDA looked forward. They ended up raising crush demand by 50 million bushels here. And you can see that's at a record 2.54 billion as we're looking out there, with a lot of that growth being pinned to bio and renewable diesel development over the coming years as the EPA has put out those new standards for 2026 and 2027, which seem to indicate we will be needing more soybean oil headed into biofuel development. On the other hand, USDA ended up lowering the export number for 2025 by 70 million bushels. So as you can see here, that'll be another 120 million bushel drop as we're looking at exports year over year. And so what that does is that sort of says, okay, Supplies are roughly going to be about the same size as usage there. So ending stock staying in this 300 to 350 million bushel range. And USDA ended up lowering their season average price for 2025 by 15 cents down to $10.10 a bushel. So as you can see here, for corn and soybeans, what USDA is projecting now as we look out over the next year, year and a half, is that they're seeing basically prices holding roughly where they are right now. Now, in terms of looking at the crop and where it's at right now, the conditions report that came out on Monday showed that this crop, especially the corn crop, is looking very good as we look nationwide, with nearly 75% being reported good to excellent. Now, that's well above last year and well above the 5 year average. And typically, when we see these crop conditions reports running above average here, that tends to mean trend line or better yields when we get to the end of the year. But we'll have to wait and see here. But so far, so good as we're looking at the development of the corn crop. For soybeans, not quite as good. It's a little bit below last year in terms of those ratings, but it's still above the 5 year average. And so as we're looking here, USDA, like I say, held their season average price or season average yield estimates basically at their trend line yields, and they'll likely continue to do that as we're looking into August. We'll wait and see if they want to update, but right now, if they update, it would likely be for a higher yield for both corn and soybeans, which leads us to the usage question. How can we continue to work through these supplies that we're building up right now? And one of the areas that we have been seeing tremendous growth, at least this year, has been the export markets, despite all the tariff turmoil there. This is looking at our export sales thus far over the year compared to a variety of metrics here. As you can see here in the gray line, I've got basically the best export year we ever had. The black line's the 5 year average. The red line's where we're at right now. The green line was last year, and then that blue line down there shows you a low point for exports going back to 2004. And as you can see here, compared to last year, no, soybean sales are up about 12.5%, but they're still running slightly below that 5 year average. So we have seen some export growth, but we're still not back to where we were over the, say in 20, 2020, 2021, but also not back to where we were, say, back in 2016 or 17 for the soybean market. On the other hand, for corn, we're basically at a record level, as I mentioned. The idea is that we have continued to see, especially late season corn sales, being much higher than we would expect at this time of year. And so we have basically almost tied that record that we set back in 2020. What'll be fascinating to me as we look forward here is, can we transition these sales into 2025? As we look at the early data on advanced sales, we have seen a little bit of a pickup on the corn side, but it's still running below the 5 year average there. Soybeans is dragging as well. And with the recent announcements of additional tariffs, especially with some of the major markets that we deal with in corn and soybeans, it may be challenging to continue to find that growth from the international marketplace, which is why the soybean market is concentrating on what's going to happen with biofuel development. So this is the soybean oil supply and use table. And what I really want to key you on is look down to that biofuel line from 2024 to 2025. As you can see here, USDA is showing a sizable bump in soybean oil usage as we get through the 2025 marketing year, with a lot of that targeted for bio-based diesel coming out in 2026. In fact, as you can see there, they're showing that 2023 sort of represented a high point. 2024, we saw a little drop off in biofuel development there, and they're looking for a resurgence in that growth as we look towards 2025. In fact, what it's basically doing is it's replacing what had been driving the market throughout the 2024 marketing year here, which had been exports, which had raced up in 2024. But that will be a big part of the game here as we're looking at soybeans. Can we see the domestic crush build up fast enough to offset some of the losses we've been seeing on the export markets over the past few years. But with this development in biofuels, it also means that we've got to find a home for more and more soybean meal. In fact, as we look at the soybean meal table here, you can see that, production continues to go higher and higher. We do continue to find more home for that soybean meal here as livestock feed, but we're also relying upon higher and higher exports for soybean meal. And again, that becomes the challenge when you're talking about tariffs raising across the globe right now. And so, as we're looking at the markets and how they've sort of reacted to this, is that we continue to sort of see that the, if you will, the threat of tariffs and the worry about future exports is overwhelming the good news story that we have with current exports. In fact, looking at what the markets ended up with at the end of the week here after the report, you can see that the futures market is projecting prices basically a little bit below USDA for both 2024 and 2025. As we look there on the number on the left, USDA had 430, markets at 427. On the right for the 2025 crop, USDA is at 420, and the futures market right now is at 414. So you can see that optimism that the futures market had, especially for corn over the first 6 months of the year, that has faded away now as we've hit the hotter part of the year here in July, and that we can see, like I say, the size of the current crop growing out there, but also concerns about how we can utilize fully that crop, especially if we're not able to access the export markets as we have been over the past 9 to 10 months. When it comes to the soybean market, again, the prices are sort of in line with USDA, but a little bit below where USDA has been talking about here. In the case for, current crop soybeans, $10 is right on the nose for both USDA and the futures market. But the big difference comes as we look at new crop, where USDA is saying 10.10 and the market's down in the 9.80 range. So the market, you can tell, especially for soybeans, and especially in this case, is looking at the big challenge when we're looking at the soybean market is that relationship between the US and China, with the continued discussions there, but the knowledge that we're probably staring at, even with a positive resolution, probably still seeing significant tariffs over and above what we've had over the past few years, leading to lower exports and a lowering price as we look out there. So, with that, that's a brief update on what we're seeing within the markets. Again, my name is Chad Hart. I'm an extension economist with Iowa State University. Thank you for the privilege of your time.